I told you guys to puff pass on these stocks. That's right, these weed stocks. We're talking about Tilray and Cronos, who decided to report some earnings today. That's right. Not today, but actually yesterday at this point. Today is the point of recording it, but both stocks are down after hours because of it. Well, Cronos reported before market open, and Tilray reported after. Cronos was down today, and Tilray was down after hours after reporting their results as well. And they had a little bit of a shaky trading window where originally it was down and then went up a little bit and then leveled up around 2% down after hours. So what did Tilray do in this earnings report? EPS missed by 20 cents per share, negative 50 cents per share. Non-GAAP EPS, GAAP EPS, negative 36 cents per share, missed by 7 cents. But revenue, $48.17 million, up 379% year over year. Pretty significant, but that is still a miss on their earnings, which something like this, I totally expected this to be hit a lot harder. I mean, the valuation on this stock is still absurd, even right now, sitting in the 20s, 21 right now. It's absurd. This is a company, I understand the revenue growth, but, I mean, you're talking about, if we're lucky, an annualized revenue of $150 million. I don't like it, especially for market cap around $2 billion. I don't necessarily see the value, but again, some of the value might be in just this revenue growth. It's all about hype, and if we're looking at the stock, I mean, obviously the whole Mary Jane sector has been, you can just see 5 years out. Since IPO here, I mean, this thing shot up over 400% at one point. Since IPO. And since those peaks, the thing's down 85%. The thing got up over $300, I believe, at one point, or up $200. It was somewhere around there. I swear to you, this was insane. Now down around $20 per share, which is still below the IPO. Down at least 25% from IPO even. So, you get what you get. I knew this thing was overhyped as can be. I know a lot of people probably made a lot of money on this, but if since that peak you had puts on this company, you probably have made a lot of money as well. So congratulations if you did that. But if you're holding this thing long term, I'm scared. It depends on when you bought it in at, but here's some of the numbers here. Tilray, right here. Revenues up 411%, 51 million. Kilogram equivalent sold 10,848 kilograms of, that's right, the ganja sold. That's up 573% from a year ago. Net price per gram down 50% though, so half the price in terms of per gram sold, which obviously is concerning. If you think about it, this company is taking big losses, and then their net price decreases as well. Certainly can have an impact not only on revenue, but obviously profit is a huge concern there. Net GAAP loss of 49.1 million, down 163%. So, yikes. And obviously, some rough losses going on here. You don't like to see that. Let's take a look at the numbers. What do the numbers say? This is nice and big format for us, just so we can see. Look at this total revenue of 51 versus last year's total revenue of 10,000. Interesting. Obviously, that's 10 milo, really. I mean, if you want to consider it that way. 10 milo versus 51 milo, which is a 409% change. Definitely a big difference, that's for sure. Something to consider. But, rising revenue, we're cool with that. Business highlights. They definitely have a couple of these highlights they like to talk about. Signed definitive agreement with Privateer Holding to extend lockup for up to 2 years. Definitive agreement to acquire 420 Investment Ltd. Yeah, that's right, 420, baby. An adult use cannabis retailer headquartered in Calgary, Alberta, in Canada. Increased international export capacity with an additional 24 hectares, which is 50 acres. Why couldn't you just say that? International market development. Export first shipment of medical cannabis from EU campus to Portugal, in Portugal to Germany. So a nice little international shipment. Expanding the brand profile. Fluent Beverage Company, a joint thing with Anheuser-Busch and Tilray. That's an interesting one. Will start distribute in 2019 December. So next month they plan on distributing some beverages. High Park, subsidiary of Tilray, unveils second phase of its adult use products portfolio. And they acquired Smith & St. Clair, an innovative UK-based confectionery company, introduced CBD-infused consumer products. So guess what? They're going to have some pod brownies, in case you're curious. So obviously they're spending a lot in terms of expansion here. Legalization is obviously the next big thing in terms of the United States, and it already pretty well is globally for the most part. So it's certainly an interesting concept here. We'll see exactly where this thing goes. If we want to look at I want to look at their cashish. I always look at their cashish. So cash and cash equivalents of around 100 million versus last year. Oh gosh, last year. So in 3 quarters, they've managed to decrease cash by about 400 million. That's not good. I don't know about you, but that's not good. A lot of this, obviously, if you think about it, will be in expenses in terms of expansion. So it's somewhat understandable, but that's pretty rough. And their total current liabilities of 130 million outweighs their cash right now. And with a company that's losing money, again, it's pretty scary. But it's kind of just the trend with these companies, really. And that's a concern I've really had with the weed industry as a whole, is who actually is going to break out. Is there just going to be a bunch of small players? Is there going to be one big player? It's really hard to say. Is it going to be like the beverage industry, where really, for the most part, dominated by Pepsi and Coke, and then there's some other players in there, but they're not nearly as big? That's a good question. Like, how do you know what's going to happen here? But if we're just looking off these numbers and valuation of the company, you see this net loss increase pretty significantly. Triple the amount. I don't like that. I don't like that at all. So, adjusted EBITDA, you know what? Might as well do 4 times there. This is rough. I don't like that net loss increase. If we're looking at valuation of this, it's just not even worth $21 at this point. I understand maybe if you're thinking about long term, but I don't necessarily like the company. In my opinion, call me biased, but I just don't know if I see the value here. I understand their impacts and what they're planning on doing to expand, but we'll see. Cronos, we got Cronos next. If we're looking at this chart, needless to say, you're going to get a relatively similar story here. Really not, this used to be a penny stock and really just shot to the moon. To the moon. That's right, since its IPO in 2016, to the moon, around 9,000% up. Is that real numbers? Yes, it is. At one point up around $22 per share. And again, since its peaks, fallen 63% in terms of share value, or around 65%. So definitely a company that's on the downswing right now, and a lot of that is, again, it's an issue of valuation. Where does the valuation come into play here? Well, let's look at this earnings they reported. EPS of, and this is in Canadian dollars. That's what the C means, Canadian dollar. 53 cents per share. May not be comparable to consensus, and there's a good reason for that. Revenue increased 237% year over year, but this is Canadian dollars around 12 million. So in U.S., maybe around 9 to 10 million dollars. It's not absurd, but let's go ahead and look at more of these numbers here. Obviously, big increase in revenue. That's Canadian dollar. Net gap, EBITDA, loss, net income. Look at that net income. Baby. 3,142 kilograms of cannabis sold, up 511% year over year. Net product revenue per gram sold. That is yet again another company decreasing their price per gram. So Cronos also launched Peace Plus, a new hemp-derived U.S. brand. You smoke some Peace Plus, baby, out of the peace pipe? No, thank you. Here are some of the numbers. Revenue, obviously, you see this significant increase year over year. Will that continue? It's the question. But you also see a significant increase in terms of lost money. So, that's pretty massive increase there in terms of money lost. But also a massive increase in terms of kilograms sold. But down 50% as well in terms of price per gram. That's something you got to consider. Cash and cash equivalents. I gotta be honest, something I'm impressed with here, and I think this is because of I like this cash and cash equivalents number. Obviously, significant increase from their zero cash pretty much last year to where they have cash now. It's good. I do like that. That's one thing I can say that I respect about this company is their cash, but they still burn through cash, as you see, a loss. But regardless, they have cash. That's what I like talking about. I love cash. What else can we talk about with this darn company? Brand portfolio, obviously. Redwood Holding Groups, 4 operating subsidiaries. Redwood Holding Groups, Cronos' market research. Yeah, that's right. Hemp-derived cannabidiol. Cannabidiol. That's right. CBD. Cannabidiol. Consumer products portfolio sold under the premier Lord Jones brand. Through the third quarter, Lord Jones launched several new products within cosmetics and personal care. Heavy duty chill balm from CBD product. That's all right. Some bath salts. You might as well eat those while you're at it. Go ahead and eat someone's face off. It's whatever you really plan on doing. This is obviously, what can you say about this company? Again, I've read through this a lot, and I'm going to look again. Just take a quick. There's not much I really want to say about this company. It's not much different than what you have going on with Tilray here. It's a company really focused on expansion pretty rapidly, and they're paying definitely money for it. The benefit that I see to Cronos over Tilray is, well, for one, I think valuation on Cronos is still absurd. If you think about it, maybe an annual revenue of $40 million US if they're lucky. Yikes. $40 million US dollars, and their market cap has to be somewhere around $1 billion. I just don't see the value at all right now. And again, as I mentioned, it's all about competition. It's one of those things where you're gambling, let's say, right as this is just my comparison, I'm going to say, which is weird. Automobiles just started. Obviously, let's just say that automobile manufacturers just started making cars. It's just a brand new thing. There's 100 different companies out there. Which one do you think is going to last, Did you bet Ford, or did you bet a company that didn't make it? That's the thing. You don't know on these things. It's really tough to see who's actually going to see growth. Obviously, they do see growth, and it looks like very high percentage now because it is high percentage, but it's low dollar amount, and that's something to consider there. One thing to mention again, too, liabilities. If you're looking at total liabilities, around $614 million. less than their cash. So not anything absurd here. I like their cash of $1,500,000 versus or $1,500,000 versus this level of liabilities. I do like what they're doing, but again, it's Canadian dollars, so a little bit lesser than what I expected, but it's also less in terms of liability. So just think about that. It's up to you, whatever you think about these stocks. I personally am not a fan just due to the valuation being slightly absurd. I don't necessarily want to invest in these either just because it's not necessarily something I agree with. So, hey, I mean, shoot. I'm not going to be invested in these, but if you're invested in these and you've lost money, I apologize. But if you invested in these at these levels and you make some money in the future, I'm proud of you. Proud of you for making an investment choice that made you some money. Yep.